Good evening and welcome to the Daily Market Update. The DSEX slipped back to the red zone today as it lost 49.26 points or 0.92% and settled at 5,319 points. Market turnover was 5.24 billion Bangladeshi takas, which is a decrease of 11.50% compared to the previous trading day. Islami Bank, Pubali Bank, and Brak Bank from the banking sector, Square Pharmaceuticals and Beximco Pharmaceuticals from the pharmaceutical sector, and Olympic from the food and allied sector mainly dragged the market down today. In terms of sector-wise return, the NBFI sector posted the highest gain of 0.31%, while the tannery sector registered the second highest gain of 0.01%. On the other hand, the insurance sector posted a loss of 1.66% today. 5 insurance, 3 banks, and 3 textile companies were among the top 20 losers today. Omra Technologies, Metro Spinning, and Pacific Denims registered the highest gain, while ICB Islamic Bank, Sonar Bangla Insurance, and Sun Life Insurance were the top losers today. There was no disclosed price-sensitive information for these stocks. Today's top-tier news: Bangladesh's trade deficit. The gap between what the country imports and exports widened by 17.44% in the July to January period of fiscal year 2025-26, mainly due to higher import payments and weaker export earnings. The deficit reached 13.79 billion United States dollars during the 7 months, up from 11.74 billion United States dollars in the same period a year earlier. The widening gap has sparked concern as the U.S.-Israel war on Iran unsettles global oil markets and disrupts shipping routes, while the Bangladeshi currency has begun to weaken in response to rising uncertainty. A softer taka could push up import costs and add further pressure on the trade balance, highlighting how global tensions are increasingly shaping the country's economic outlook. The National Board of Revenue is set to lift restrictions that prevent non-bonded exporters from sourcing raw materials locally through back-to-back letters of credit, LCs, a move aimed at easing export procedures and improving access to inputs. If implemented, the policy change is expected to benefit more than 1,100 ready-made garment exporters that currently operate without bonded licenses but depend on locally sourced materials for their shipments. The step could significantly streamline supply chains, giving smaller exporters a stronger foothold in global markets and helping the country's apparel sector sustain its competitive edge. That's all for today. Thank you.